Welcome back. It's been a minute. Just been moving yards in a new house now, so that's nice. Just been moving some stuff in, so not been too active on the YouTube side of things. Still been trading though in the Discord and that. Learned a few things from looking at the levels I was previously using, and now I can apply the characteristics from them sessions into the market, and be able to actually catch some nice trades along with my indicators from crypto. So I was using that strategy for quite a while, and although it did work, and it did perform results, it wasn't as consistent over a longer period. It definitely kept you in profits, but the drawdown was more than I'd like in terms of losing trades in a row. You could catch maybe 3 or 4 good high IRR trades, but then maybe lose 8 or 9 in a row, and that's not really a strategy I'm looking for in gold. I'd want it to be a little more consistent, and I can just keep sort of spinning some money into gold and not just jump straight into the deep end, and start off low, build it up high, and go from there. But we'll go into today a bit about what I've been doing, how I'm going to start using this and incorporating it into my trading. So it's going to be a bit of a lengthy video. I'm going to try and cut it down a bit. Hopefully that will sort it out, make it a bit of an easier watch, maybe put some background music in while I'm speeding some bits up. So today, 16th of July, this morning, looking to short gold at the 50-minute FVG, and there was an order block on hour, just here at these lows that came across, and there was a 15-minute fair value gap. And as I was starting to look for the trade, first came into that area, and this money flow here hadn't came down. So when it pumped up here, hadn't came quite down. So I was expecting another pump up, which will either take us to these highs, or might not even possibly take us above them. But then as soon as that's printed, we look for another entry on the way down in that scenario. So as you can see here at 8.22, the highs got taken. I was looking to short on a trigger wave. What trigger wave is essentially, see these bearish divergences here with the money flow momentum, that's quite heavy. You can expect quite a fast, nice drop after them. So I was looking at a trigger wave, which is basically just another red dot above the 0 line. As you see, we had the red dot here classed as a divergence because that red dot lined up with one of these candles, not these candles. So it's higher on the red dots, where it's lower here. But the money flow started to slope up, so I was a bit less confident here. As you see on 1 minute, we've seen this money flow cross into the green, the momentum coming up, so it's quite likely that we were going to go a bit higher before coming down, and it got stopped. So as you see here, this was entering, came up, got stopped. Then we got the same again, so this is lower than a dot that's over here, and this money flow is coming down, and we just continue to show that bearish indication while coming up to that key level. So I took that initial first trade. If I just left this trade in, it'd have been good because that actually did run, but I put my SL entry too early, so we'll go and see this now. The trade started to work up a bit here, and was just looking to make sure that we could survive one more retracement, and then we'd be comfortable to put the SL entry. So at this point here, we had the SL entry. It got super close to this first TP, then just reversed, came to hit that SL entry unfortunately, but I'm still confident in the level. But if it gets up to here and price didn't show me any bearish entries, I wouldn't want to be in the trade. So if I'm back at entry, I might as well take that choice again at the same level. Plus you do get a bit extra because it's just below the entry, so I think it was like an extra $20, and it came here, and I was looking for the same entry again. So we've got the red dot here, there's lower red dots compared to these lows as well, so it's called a trigger wave. The anchor waves are on the higher, and the divergence is obviously when they're going separate ways. And money flow was still red here. Money flow wasn't coming up sharp here, it was just sort of sitting there. So with a red dot, this could bring us down. So I targeted my SL, as you can see here. The original SL was here, 3343, and as we made this high, came down, went to 3341. And by the time I was here, I had my SL to the entry. The SL was there, sorry, that's why I moved my SL to. There wasn't an entry yet. We did hit the TP1 POC, which is just there. So I've just downloaded that screenshot here. We'll see if we zoom in that trade today on here. This is a bit dodge. So you see here, well, it's not actually catching both the pages in there, is it? Oh yeah, it is, yeah, 580 at the bottom. So the P&L amount here, 580. This is the trade. You can go and check the entry and exit prices if you want, but that's exactly what it is on the chart. I made 580 from the TP1. Then we left the rest in for some more, so we did make some fees on top of that, like $20-30 on top of that, but that was the main trade. So yeah, now just going on to the chart, market Cipher was. I can show you where this played out and why it played out. So on the higher time frame, at this level here, you can see we're starting to get these high highs, these lower lows. And in particular at this time, this money flow doesn't look amazing. But as we go to there, if I just get this, 1 second. 1 hour's looking for a red dot, money flow is coming sharp down. So momentum top side, money coming down. When that prints a dot, it's going to be a nice harsh dot. 4 hours just printed green, but again the money flow is coming down. That green hadn't been confirmed at the time of entry, but it's confirmed now. 4 printing green, but money flow is not good. So then on the day, we're looking to print a red dot, money flow coming down hard red. This is a nice signal when we do print that red dot at the beginning of shorts. We had all the things I said in the group chat. There's an order block here, that order block from these hourly lows, and there's a fair value gap here for 15 minutes. But using them, we came to this area. If you look on the 5 minutes, we've got this steep momentum coming down. We've got this money flow coming down. So at the time that we've had that divergence between these highs and these momentum waves, and the money flow has crossed into red, you pretty much know you're in for a good trade. Not 100% of the time, but 99% of the time. So that situation there. So using that same entry sequence, I actually entered on this. My initial position was on this here, this candle. So as soon as that printed, I shorted. So yeah, coming to the chat here, we see it entered at 3340. That line is there. We just printed that red dot on the 3 minutes. We'll go and see the 3 minutes right now. So there's a red dot here on the 3 minutes. So yeah, same place on the 5 and the 3. So that red dot printed on that candle, we entered on this candle. So yeah, exactly the same place on the 3 minute. And as you can see, we came to entry, but we did hit the TP first. Then we did just drop. So our final target was just there for a 6.6. So that was to 3320. 3320. But the problem was I did put in my SL entry after hitting a TP. Still got 3.8R on the one contract, but the second contract just hit entry and made a bit of money out of the extra above the entry, but nothing major. So yeah, that's how I'm going to be implementing this into the sort of strategy so far. So it's important to note that in these areas at the start of the day, I am looking at the naked points of controls, the fibs, the DRTs beforehand. I'm not going to cover all that right now. I'll do that in another one, but this is sort of the market Cipher masterclass for gold. But yeah, no, that's sound, and I'll catch you next time. See you.